This strategy works on the 30-minute, 45-minute, 1 hour, 2 hour, 4 hour, and even daily time frame. The strategy uses no leverage. What's more, the strategy was coded so that it automatically offsets by 1 bar. This means that the strategy should not repaint. Hello traders, welcome back to the Switch Stats channel. Today we will be going over a new strategy that made over 400% with no leverage and no order pyramiding. Please leave a like on the video and subscribe to the channel so that we can keep making these free videos. Now that we have gotten that out of the way, let's start. What's great about this strategy is that it's very easy to use. We have also tested the strategy on Forex, where it made over 14% on the Euro-USD pair trading on the 30-minute time frame. We also tested the strategy on stocks where it made over 300%. This was by trading on the 30-minute time frame on the Tesla stock price. Remember, both of these backtests were done with no leverage and no order pyramiding. Now, let's take a closer look at these backtests. For the sake of the video, we will be showcasing the strategy on BTC/USD. As you can see, the strategy makes a profit on all timeframes starting from the 30-minute time frame. It made around 140% on the 30-minute time frame, around 120% on the 45-minute time frame, and on the 1 hour, 2 hour, and daily timeframes it made around 120%. But by far the strategy made the most profit on the 4-hour timeframe, making over 450%. These are really good results for such a simple strategy. We also see that there is always minimal drawback when trading with the strategy. Another factor we can look at is the amount of trades that were taken. On the lower timeframes, between 100 and 300 trades are taken. This causes the results to be more credible, since if the number of trades in a backtest is low, the results can be unreliable. What's also interesting is that the same was true when trading on the Forex market. As you can see, the strategy had minimal drawdown and took loads of trades. As we have previously said, we also tested the strategy on the Tesla stock, where the strategy took a lot of trades and also had minimal drawdown. Now that we have gotten all of that out of the way, let me show you the strategy and how it works. The strategy uses 2 indicators with changed settings. The indicators that are used are the RSI indicator and a simple moving average indicator. Luckily, TradingView already has the SMA combined with the RSI indicator, so we will definitely be using that. Go to TradingView and search for the RSI indicator, select the indicator made by TradingView, and add it to the chart. Now let's change the indicator settings. Head over to the settings icon and go to the Inputs tab. Now change the source to open. When you have done that, change the RSI length to 8. Lastly, change the MA length to 34. That was all that we needed to change for the inputs. Now head over to the Style tab and change the color and thickness of the lines so that they become more visible. Now you can click on the OK button and save the settings. Now let me show you when to enter into a position. The strategy works as follows. We are calculating the difference between the moving average and the RSI values. So in this case, we see that we have an RSI value of 69.49 and the value of the moving average is 49.38. To get the true value with this strategy, we will subtract 50 from the moving average. If the amount switches from negative to positive, we will enter into a sell position, because this means that the market is overbought. So in this case, subtracting 50 from 49.38 results in a negative number. However, on the next candlestick, the value of the MA is above 50. This means that we can enter into a sell position here. Now let's take a look at a buy signal. As you can see here, the value of the moving average crosses below 50. This means that when we subtract 50 from the value, we will now get a negative number. This indicates a buy signal, since this means that the market is oversold. So we will enter into a buy position here. The strategy uses a trailing stop loss to make it so that your stop loss can be dynamic. However, we will get to that later. You might be thinking that this seems like a very complicated trading strategy. But don't worry. There is a script that was made for the strategy to automatically show buy and sell signals. Let's add it to the chart and configure it for the best results. Head over to TradingView and set the timeframe to the 30-minute timeframe. You can remove the previous RSI indicator that we added for the explanation. After that, go to the Indicator Search tab and search for the RSI versus SMA indicator. Select the indicator made by J. Rogers. Now close the Search tab and head over to the indicator settings. Go to the Style tab and deselect the Bar Colors checkbox. Once you have done that, also change the area MA color. Lastly, go to the RSI line settings and change the color and thickness to make the indicator more visible. That was all that we needed to do. If you have been looking closely at the chart, you will see that there is a big problem. The strategy takes a lot of buy and sell signals in a short space of time, which can cause for problems. But don't worry, we will show you a fix for this later in the video. Now, let's go over an entry made with this script so that you don't take false signals, and so that you will fully understand when to enter into positions. As you can see, the value of the moving average area went from positive to negative. This indicates that the market is going from overbought to oversold. This causes for the script to enter into a buy position. Now you might be wondering where to put the stop loss. Well, the script actually uses a trailing stop loss, which can be seen in the indicator settings. You can of course change this stop loss, however for this showcase, we will keep the trailing stop loss at 120 points. Now you might be wondering why it didn't exit at this point, because the position was down 120 points here. This is because the strategy offsets by one candle. This means that the strategy always waits for the candle to close before entering into a position. I hope you now understand the trailing stop loss better. To make sure everything is clear, let's take a look at a sell position that was opened with this strategy. Let's take this entry as the example. The value of the moving average area went from negative to positive. This indicates that the market is going from oversold to overbought. Overbought means that there is excessive buying at an unjustifiedly high price. This causes the script to enter into a sell position. As shown previously, we will exit the position once the trailing stop loss has been hit. However, if you would like for a fixed stop loss to be used, this can of course also be used, then you will need to change the settings in the Inputs tab. As you can see, the trade was profitable. Like we said previously, if you have been looking closely at the chart, you will see that there is a big problem. The strategy takes an excessive amount of trades. To fix this, simply adjust the stop loss. For the video, we will change it to 360 points, however, you can of course choose a different number. As you can see, we went from opening and closing a position on the same candle to being in the position for a few candles. You can also see this in the average number of bars and trades. It goes from 7 to 18. Overall, this seems like a very promising strategy, however, please remember that past results don't equal future results. If you have any questions, leave a comment, and if you haven't already, please leave a like on the video and subscribe to the channel for more.